Hello everyone, my name is Yoko. On this channel, I will be disseminating information that I have collected in English, as I feel that the information that is happening in China is often not accurately conveyed to countries other than China. We obtain information from multiple media sources, so we would be happy if you could give us your opinions on the content of the video in the comments. Also, my native language is not English, so I use an AI speaker to create audio to convey information correctly. If you like it, please subscribe to the channel and support us. This time, I will talk about the Chinese stock market. Stock prices in China rise and fall in response to the policies of the Chinese authorities. If you look at stock prices in Shanghai, they have been rising rapidly recently. This is the result of the Chinese authorities doing various things to try to increase stock prices to prevent them from falling. First, there is a tax on stock trading that has had a large short-term impact on stock prices in China, but this tax was lowered from 0.1% to 0.05% on August 23. In other words, the tax was cut in half. Regarding increases and decreases in taxes on stock transactions and their effects, the biggest change was in 1991 when the tax rate was lowered from 0.6 to 0.32. At this time, the tax was halved. The stock price has skyrocketed since then. Now, let's talk about when taxes were increased. In May 1997, taxes were increased from 0.3% to 0.5%, but immediately after that, stock prices fell. The following year, when the tax was cut from 0.5% to 0.4%, stock prices rose again. Sometime later, in November 2001, the tax rate was cut in half. When taxes are reduced from 0.4 to 0.2, stock prices rise immediately after that. Tax cuts and tax increases have been implemented since then, but the trend has been that stock prices rise immediately after tax cuts. In the long term, there are periods when stock prices fall to reflect economic conditions, but in the short term, stock prices rise when taxes are reduced, and fall when taxes are increased. Once again, stock prices are rising due to tax cuts. The rise in stock prices is due to the Chinese authorities implementing various policies to increase stock prices, and stock prices are responding to these policies. By the way, it is said that buy orders are also entered by players under the influence of the Communist Party in order to create a rise in stock prices. So, in the short term, stock prices are rising within China. So why does the Chinese Communist Party want to raise stock prices? When raising funds in China, company owners often borrow money by using their company's stock as collateral. For example, let's say you borrowed 80 million yen by putting up 100 million yen worth of stocks as collateral. However, if the stock price falls, the lender will not be able to get the loan back and will be left with no collateral. At the time he lent the money, the stock price was worth 100 million yen, but it had steadily fallen and was approaching 80 million yen. In that case, the person lending the money will likely be unable to secure the collateral, so please put up collateral for yourself. If you do not provide collateral, you will have to sell the shares and recover the funds. The same goes for people who buy and sell stocks on margin. I bought stocks on credit, but when the stock price continues to drop, I am asked to add margin. If margin calls cannot be made, the stock will be disposed of and the loss will be determined. We're doing the same thing on a larger scale. When Chinese managers sell their stocks, it creates selling pressure and causes the stock price to fall further. Since this would start a negative chain of events, it is thought that China is under pressure to hold on to its shares rather than sell them even if the collateral is broken due to the power of the government. The person lending the money had kept 100 million yen worth of stock as collateral at the time of the loan, but since the stock price has decreased to 70 million yen, they are now unable to recover the full amount even if they try to recover it. It is said that there are quite a number of such debts in China that are left uncollected. This is a bad debt. Falling stock prices are not only a problem for people who trade stocks, but also for people who lend and borrow money using stocks as collateral. This problem can be solved if stock prices rise, so the Communist Party also wants to raise stock prices in China. Therefore, various policies are implemented to prevent stock prices from falling. And we are encouraging the flow of domestic money into China to be invested in existing stocks. This tax cut is part of a policy that will lead to higher stock prices, but there are also various other policies that are being implemented to raise stock prices. For example, we are restricting the public offering of new stocks. As IPOs continue, money flows away and does not flow into existing stocks. It is believed that when investing in a company that has just gone public, the stock price will often rise, so if the IPO continues, funds will flow from existing stocks. It would be bad if the stock prices of existing companies fell, so we are moving toward restricting IPOs. Furthermore, owners of companies that are unable to pay dividends due to poor corporate performance or that pay low dividends should not sell their shares. Company owners know their companies well. If you realize that your company has no future, you may want to sell while the stock price is still high. If this happens, ordinary investors who do not know the internal affairs of the company will end up grabbing high prices. When many people lose money in stock trading because they don't know inside information, the credibility of stocks disappears. China's domestic stock market is not considered a place for decent trading. Information disclosure is sloppy and insider trading is rampant. Only those who know the information will make money, and ordinary investors will only be able to extort their funds. For this reason, I think there are quite a few people who think that investing in stocks is less than gambling. Since there is a possibility that China's domestic stock market will not grow in the future, owners of companies with poor performance are not allowed to sell their stocks, thereby holding management accountable. If you want to sell your stocks, the Communist Party instructs you to improve your company's performance so that you can pay dividends. Therefore, the purpose of the Chinese Communist Party is to establish an image of the Chinese domestic stock market as a safe investment destination and to encourage investment in stocks. If stock prices rise, those who borrow money using stocks as collateral will be helped, and those who lend money using stocks as collateral will also be helped. The Communist Party's intentions are already clear. In any case, they want to use any means possible to raise the stock price. So, in the short term, there is a response in the form of rising stock prices, but stock prices rise immediately after a tax cut. But if the economy is bad, it won't last long. Stock prices may rise temporarily through small-handed manipulation, but it will not last long. If a company's performance is poor, the company's stock will eventually be sold. Therefore, restricting IPOs or restricting company owners from selling their holdings will not improve company performance. First of all, when it comes to doing business with foreign countries, if you are doing business with a Chinese company, you don't know when business will suddenly stop and you will suffer a big loss, so business with China will no longer be the mainstay of your business. In fact, an increasing number of companies are leaving China by setting up factories in other countries. I think there is a growing international consensus that the Communist Party is an incompetent and even harmful government, so we should be careful. That's all for now. See you next time.